Another very challenging day. 6 out of 7 of the last days have been extremely choppy, and we are in our third day in a row hitting a worst case drawdown. So we are down 3,500 on the day, down 11,000 on the week, down about 10,000 on the month. We're down on the month, down on the quarter, still up on the year. I am pausing trading right here in this, recommending pausing. You can continue to trade it if you want, and it may recover from here. But this market is just more extreme. It's more. There's more chop. There's more bounce. There's really a lack of intraday two-sided price action for much longer than I've ever expected. These markets are extremely difficult from where I sit. And the only time the market has gone down lately is during an unexpected, during a news event when there is a surprise in the news event. You can see that here. We had CPI here. And see the market rallied into CPI. It sold off, and then it just kind of chopped a lot, not really anything. And then yesterday we had FOMC. The market rallied to here, which happened to be the low point of CPI. So you see CPI there, comes back to here, and then flashes down in the last hour. And then today it just chops like crazy. And the intraday price action is just really hard to trade. It's unprecedented to see a market that never goes down. We were positioned well. We had about 6 strategies in the NASDAQ, and this market should have rolled over another 100, 200 points. Would have been a nice day. Would have been normal. Would have been expected, but it just gets propped up all day. We talked about prop up price action in the afternoon. Now we're getting all day prop ups, multi-day prop ups, and I don't know what the hesitation is. The fundamentals keep getting more bearish, and the realization that the market should go even lower seems to be the case. These June 16th lows are a strong desire to support those, but in the end, that's just psychology. It's not reality. Markets came down here in the pandemic, rallied here. Had the pandemic not happened, I anticipate the market would be somewhere in here. And had we not had a pandemic, we would have been trotting along potentially at these levels, and the bulls would have been very happy to be right here in this slow grinding bull market, and it would have been time to have a top. And from my perspective, we're not even in a bear market yet. This is higher than where the market would be had we never had a pandemic. The market is higher now with less productivity and inflation, and so we haven't even started the bear market, in my opinion. A bear market will have more sell-offs intraday, and we have just had a repricing from the high so far, with lots of overlap and still lots of bullish tone to it, lots of dip buying still. The Fed's balance sheet was released for the past week. As of yesterday, the Fed lowered their balance sheet by $16 billion this week. So moving in the right direction, but it's only down $10 billion on the month. This month, they were committed to start lowering their balance sheet by $95 billion a month. So they have basically 7 days left. This is through yesterday. So they have basically 7 days left to drop it another $85 billion. Hard to imagine. They probably won't make good on their promise. They're dead serious about fighting inflation with interest rates. They've committed to lowering the balance sheet, but they don't always do what they say they're going to do. They commit to something, and then no one holds them accountable. There's no consequences for saying one thing and doing another if you're in the Federal Reserve. So that is part of what I believe is causing this market to be propped up so much, and makes it difficult to trade. It's not true pricing correctly. It's levitating, and let's go over the trades on the day. So the ES trade cover 3 was up on the day. You can see just the sideways price chopping in this market. Market that continues to diverge. You get this last hour, let's take out the highs and then run towards the lows and then bounce back to the middle. Just right there, just perfect mean reversion, perfect chop, perfect environment to be frustrated in. Momentum reversal, get out around break even. 60-minute breakout, got short, stopped out, reversed along, long side got stopped out. And so down on the day on the ES, since this strategy was down, momentum reversal was break even, and Cover 3 was up, but it made less than 60-minute breakout short loss. Let's look at the NASDAQ. EVP1 caught the reversal, but then the market rolled over again. And then gap continuation 2019. we just can't get a good short going. This strategy actually did well during the pandemic on long and shorts, but lately, since about May, we cannot get a good short trade going intraday. The market is moving down, but it would have to be just quick moves, pre-market or in the last few minutes or overnight. And so minus 1215 on gap continuation 2019, gap continuation 2022. Down on the day, minus 1255. Tick reversal, had a nice short, and then got short again. And just this crazy stop running to highs. The extra liquidity enables that levitation that would not normally be there. Tick pulse, got short, stopped out, got short, stopped out. Overlap in Q, got short, stopped out. And so Cobra 3 got short, stopped out. Just to stop running, rise as soon as it stopped out, then it reverses and goes below the entry point for a short, which would have been profitable. VTNQ ended up being profitable on the day, just a little bit, barely scratched break even. And so just a hard market to trade. Yesterday, same thing. This type of market was hard to trade. You just see chop every day. And so those are the trades on the day for Thursday. I'm going to pause trading here until I have a better setup for this type of market, or this market starts acting correctly. I'm going to take a research break. If you have a subscription, I recommend pausing trading, and then I'll have a updated subscription. For any extended pauses, I will extend your subscription for the amount of time that we were paused. And so keep that in mind. You don't want to trade. You want to chase a bad market, a market that's ridiculous. One of the things that we have to consider is this market has been propped up when it should be going down. And so the mean reversion for this, the realization for this could be limit moves where the market opens limit down, or flash crashes, which will also be hard to trade. So we're getting the choppiest downtrend potentially. If the market comes to realize what the true value is quickly, we won't get any nice trends down. We will get either this choppy trend down that we have, and then a limit move or flash moves, which are both scenarios are both hard to trade. Unprecedented. We typically get more a better market to trade in a bear market as far as distribution trends, but we're not seeing those. So those are the trades on the day. One I wanted to share with you. Pause trading here. If you have a subscription, I'll extend it to you for the amount of time that we paused trading. And so if we pause for a month or two, I will extend your subscription for a month or two while we rediscover this market environment. And it's better to maintain and preserve capital in this type of market. We are up on the year while a lot of investments are down on the year, so we hang on to that. And let me know if you have any questions, and we will go from there. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.